again to the Real Collective podcast. My name is Brendan McKeigan. With me, as always, is Sean Tasse. And with me for the first time is Rebecca Nickerson. Rebecca, thanks for joining us today.
Hi, thanks for having me. I'm looking forward to it.
Yeah. Rebecca is a mortgage agent. We thought we'd bring her in today and talk a little bit, get some actual expertise in the field instead of us two rambling on about it, but about portaging some mortgages and some bridge financing options for you. A lot more is happening now in the market where maybe you're holding two homes. Closing dates are getting a little more flexible and longer. So we thought we'd go into that. Before we do, if you're new to the channel, please like, subscribe, and share. That would be wonderful. On YouTube, Apple Podcasts, Spotify, wherever you have your stuff. And without further ado, let's get into it. Sean, this was a great idea. I'm glad that you invited Rebecca on today. How did this come about?
Had a few clients recently ask about porting mortgages, and there was a bit of confusion about how people could bridge finance, and they don't sometimes realize the barriers that need to be crossed before getting there. So I figured we could just jump right into it. Rebecca, thanks very much for joining us today. Before you get into it, why don't you tell people just a little bit about yourself, what you're into, and how you got to being a mortgage broker, and sort of then you can just take it away and jump right into porting a mortgage, or portage, as Brendan calls it. I could
portaging a mortgage. It's more fun that way.
Yeah, it does kind of. Thanks guys for having me. I'm a mortgage broker. I've been working in finance for almost 20 years, scary as that is. So real estate, mortgages, although, it is a debt, but it is a passion of mine, just, being able to help clients through the process of, buying a home, financing a home. It can be an overwhelming process for a lot of people. So really my job is to just kind of help anyone through that and guide them through, just like you guys would for the sale of the home, the financing part of it. Yeah. So when we're talking about porting a mortgage, so this would refer to what we're doing is being able to essentially transfer your current mortgage. So maybe you have like an amazing rate. You got one of those super low rates during the pandemic that you want to hold on to. And that's a great way you can actually transfer it over to another property. Now, keep in mind when you're porting a mortgage, it generally means that you're not likely to increase the amounts that you're borrowing or changing the terms of the mortgage. So you're pretty much locked into the contract that you have currently. And unfortunately, with porting, usually we're looking to upsize or maybe downsize. We're not moving laterally. And in those cases, there are some solutions in the sense that you can still, if your lender allows you to port that mortgage, you may be able to add maybe a second mortgage on top to add to the financing amount and to help you out with that purchase. Or you can also look to do what they call a blend and extend if the lender allows that. So a blend and extend would essentially be, they're going to take your existing rate, they're going to take a look at what the rates are being offered at the time, and then they're going to come with a comparable rate, keeping those two rates in mind. And that is also a great solution for many people. Although you may lose that low rate that you received, you're not locking in at that higher rate that the current market is offering.
My guess is they come up with some mathematical equation and most of our clients, I think, are moving up, right? We're at the stage of our lives where we're all about the same age. We've got young families, and we're going for that next house, right? That bigger house. And I think a lot of times, if you're going to do a blend and extend, and you compare the payments for that versus the payments for porting plus adding a second, it's going to come out to pretty close to the same thing, is my guess.
Yeah, exactly. So the whole idea there is that you're getting some benefit from that lower interest rate. And then also you're probably preventing yourself from having to pay a big penalty on that current mortgage. So most lenders, if you're going to break that mortgage, they're going to require a penalty to be paid. So it's a great way to, again, avoid that penalty and also, take advantage of that low rate.
Right. And so the people who might want to port their mortgage might potentially be downsizers if they're getting, let's say they're leaving the bigger house, they might be empty nesters and the kids have moved out and they're going down to the smaller, bungalow or a semi-detached bungalow or whatever it is. They're moving from the 2-story house and they owe maybe 200 grand on it. And the one that they're selling it for $1 million. The one that they're buying next is maybe 600. So easy to port that to the next one and just keep that $200,000 mortgage at that super low interest rate because they have the other $400,000 to put as cash towards the home. Does that make sense?
Exactly. Yeah, absolutely. Absolutely. So in the case that you're not changing any of the terms or changing the finance amount, then you would likely be downsizing. And then maybe you're receiving some equity that you could, again, use your prepayment privileges to put back down on your mortgage later on. But in the case that you're upsizing and looking for more money, then you likely would be looking to either put a second mortgage on top of that first mortgage or do what we call a blend and extend.
Cool.
Which, like you mentioned, it works out to be exactly the same thing pretty much.
Yeah, that's great. The other thing before we just go to the break here, the other thing is the great thing about I've found working with mortgage brokers as opposed to working with the bank, obviously, is the ability to just reach out to you at any point and just, hey, have a chat, have a conversation. Before we break, how can people get in touch with you?
Yeah, so I'm easily accessible. They can email me, they can text me, they can call me. I'm assuming that you'll probably share my information, but my email address is Rebecca Nickerson at themortgageadvisors.com. And I'm always happy to answer any questions. And, those are big conversations to have. So, when you're buying a home, for instance, those are conversations that we would have at the beginning. Like, how long are you planning on living there? Because, if you're only planning on living there for a couple of years, then it doesn't necessarily make sense to lock in a 5-year fixed rate mortgage. And there's also, there's lots of discussions to be had about not just the purchase itself and the interest rates at the time, but, long-term solutions when it comes to mortgages.
When I bought my first house, I planned on living there for 3 years and I was there for 10. So.
Yeah, it happens. That's part of the renovation cost. And maybe we can go into a little purchase plus improvement stuff if we've got time. We'll figure it out. We're going to take a quick break. Probably a word from us or some reels, something fun. If you want to talk to Sean or I a little bit more about what to expect as far as getting a mortgage, maybe you're a first-time home buyer, book an appointment with us in our Calendly links below. So we can do that. We can touch base with you, and then we can introduce you to Rebecca through a lovely email chain. The future is now. So we'll take a quick break here on the Real Collective podcast, and we'll be right back.
The numbers are in, the data is compiled, the thinking is done, and the final results are in for the El Predicto 2023. As you know, I always predict what might be happening in the year coming up, and I've done the same for this year. So what? So if you want to know what I'm thinking is going to be happening coming down the pipe in 2023, as well as take a look back at what I thought would happen in 2022 and what actually did happen, take a look at that video below. You can see it in the link right below this video here. Click that open, have a look at it. And if you look at that video, you can also see all of my El Predictos going back to 2017. Now what? Do all that stuff that I just said, and if you'd like some more personalized information about what all this means to you and your family if you're considering moving this year, reach out. As always, the phone number 1-888-REAL-585, and until then, keep it real, Collective.
Welcome back, everybody, to the second half of the Real Collective podcast. Rebecca Nickerson is still with us today. We're talking mortgages, portaging mortgages. I like to call it that because it's all part of the adventure. And now we can get into a little bit of the bridge financing. And before we do, again, please like, subscribe, and share the channel. Download us on Apple Podcasts, Spotify, YouTube, all that kind of stuff. I don't need to say it. You guys already know because there's 12 of you. So let's get into it for the second half. We're going to talk about some bridge financing.
Hit it. Rebecca, tell us all about bridge financing.
Yes, absolutely. So Bridge financing, it's a great solution. It is considered a short-term solution. So it's designed to kind of bridge the gap between two transactions. So perhaps maybe the purchase of your new home and the sale of your existing home. So if you've purchased a new home and sold your current home, but the sale takes a little bit longer, or it's your taking possession of your new home prior to the sale of your old home, then sometimes we need access to a bridge loan, which would be a loan to help you cover the down payment on the purchase.
Now, let me just be super clear about this, because there is some confusion with people. What you're referring to is not the sale of one of the homes, but the closing date of one of the homes, right? Because there's like two sales.
Correct.
The first sale
Absolutely.
is like the firming up of a home, and the other is the moving date. What we're talking about now is we're talking about the moving date. We're not talking about firm. You can't have a bridge mortgage unless you have a firm sale on both sides, right?
Yes, ideally. So most lenders, especially in this market right now, are looking for those firm sales. In some markets, they'll look just to see that the home is listed on MLS. But, to alleviate any risk, ideally, you would have a closing date already set on the sale of your current home in order to access that down payment. And of course, you've got to have reasonable equity in the home to support the down payment.
And what it does, it gives people sort of the ability to not have to do both, like the purchase and the sale, both closings, and move everything out of their house, put it into a moving truck, and move it all into the new house, all on one day, because it's overwhelming, right?
Yeah, exactly. Or sometimes those dates just don't match up for whatever reason, or, maybe you can get a little bit more for the sale of your home by extending out the closing date. And in that case, then, bridge financing is a great solution. It usually does mean that, so you don't have to qualify for the mortgages on the two properties, which is great. But it does also come with somewhat higher interest, although it would be for a short term. And there are usually some fees, some manageable fees. So maybe a couple $100. It's not going to break the bank, that's for sure.
So yeah, that's obviously the rates change, and when people watch this video might be different. Is there some rule of thumb or some sort of easy, manageable way that people can make sense of, hey, you know what, if I want to get a bridge mortgage on, let's say, for example, the house I'm selling is $600,000, the house I'm buying is $900,000, and I've got that $300,000 difference between the two, and I have a closing date on the gap of about 2 weeks. What are the things that are taken into account when calculating what the cost would be on a bridge mortgage like that? Obviously, the interest rate, the time, what the down payment would be. What other things am I forgetting?
So it's really just the interest on that down payment that you're borrowing. And it's pretty much calculated per day. So if it is, like, for instance, in your case that you're mentioning, 2 weeks, then it's not going to be a hefty amount of interest. And then, yes, there's usually a fixed fee associated just to set it up, that bridge financing. The lawyer will also put a mortgage likely on both properties. So hence the reason for the additional costs.
Right. So something like, and it's going to be different for every lender, $400 or $500 to set the product up, for example. And then the interest rate, the per diem, will only be charged on the down payment of, let's say, if it's a $900,000 house, your down payment's probably going to be, I don't know, to 150, for example. So all you're paying is the interest on 150, the per diem interest on 150 plus the setup fee over the course of those 14 days. And interest rates are let's call them 5%, just for numbers' sake. 5% on 150 times 14. Is that about right?
Yeah, that would be it. Exactly. And then you just have that, fee in there. Now keep in mind as well that while you still have your old home or your home that you're vacating, you'll still need to pay any mortgage payments during that period until it's paid out.
Right. Yeah, that makes perfect sense. So if I just go 100, I'm doing the math real quick here, times 0.05, nope, 150, times 0.005. So that's 750.
Yeah, that's probably about right. You're probably looking at, in this market, it's probably going to be closer to maybe the 7-8% range, but
Right.
it is still, considered a minimal amount when you're looking at the sale of your property. And especially, if it allows you to get that much more for the sale to be able to extend out that closing date, then oftentimes it's well worth it.
Yeah, so it sounds like 2 weeks might be like $2 or $3 grand all told by the time you do your bridge.
Exactly. And keep in mind too that lenders typically, most of them are going to be looking at 3 to 6 months maximum, which I think is also a good thing because, if you don't qualify for both mortgages, then it's probably not the best situation to be carrying mortgages for 2 properties through a longer period than that.
Yeah, definitely a great idea for anybody that's got like renovations planned so they can get in there and do it with an empty house as opposed to just sitting there and just like, oh, let's bring all of our furniture in so we can move it around later so we can do it. And then you never get around to that renovation you want to do. So instead of 2 weeks, now you're looking at 2 years before you even get started.
Yeah, exactly. Or even just painting the house, right? Painting it and
That's a beautiful segue to talk about that purchase plus improvements, Brendan. You did exceptionally well there.
Thank you so much.
It's like you hosted podcasts before.
All right. No kidding. Just leading you right in. Yeah, I know that I've had some clients do that where they get a purchase plus improvements mortgage. So we've got a couple minutes left. Can you break us down on what that might entail for people?
Yeah. So a purchase plus improvements mortgage, it is considered an insured product. So that usually means that there's going to be an insurance premium associated with it. But what it means is that the lender will finance a higher amount to allow you to do some renovations within the home. So typically when we're setting up a loan like that, or a mortgage like that, I should say, they're going to request quotes from, qualified experts to be able to make those improvements to the home. And then they're going to want to be able to see that it is going to, in fact, increase the value of the home. So you can't just take a purchase plus improvements to paint the home, for instance, if it's not going to add any value to the home. But, a perfect situation would be, an outdated kitchen. So renovating a kitchen would definitely add value to the home, and the lender would see that and agree with it. And, that would be a very common expense with a purchase plus improvement.
And there's a maximum amount for that, right? Is it 40 grand? Does that change?
Typically, you can go higher than 40. However, you have to keep in mind that you have to have access to that cash readily available as well. So you do need to be able to pay for the expenses, and then the lender will re-advance you the money once they know that the renovations are in fact complete. And again, it would depend on the borrower's profile and the value of the home for sure.
I guess that's almost similar to a construction mortgage. It's funny because you talk about what might improve the value of a home. And I would tell you that if you're going to be selling a house, paint is one of the things that would increase the value of the home like the most. And windows would increase the value of the home like the least, it seems. But I'm sure the bank would be like, oh yeah, hey, you're going to replace the windows? Sure, we'll give you it. But it's actually not going to have if you've got a house that needs paint and windows, and you do the windows and not the paint, you won't get as much for the resale of the house. So it's not based on the reality. Sometimes it's based on, hey, here's what we think would increase the value, even if it doesn't actually.
Exactly. And you also want to keep in mind that like you can't be paying cash for these items. Like you do have to, I've had that happen. So you want to have like, invoices and reputable tradesmen doing the work for you. So those are important things to keep in mind.
Yeah. Receipts, paper trail. Everybody wants, when you're borrowing government money, you need to prove that you're spending it.
Yeah, absolutely. So with the Purchase Plus Improvements program, there is a bit of homework to be done at the beginning, which, sometimes can steer people away from doing it. But it is a great program. Absolutely, it is a great program. And again, there's many different mortgage products out there that are out there to benefit you as the borrower.
Right.
Perfect. And if you want to talk to Rebecca about those, hit her up at Rebecca Nickerson at themortgageadvisors.com. Some of her info is below. I think that's a great spot for us to wrap things up. Thank you so much for joining us today, Rebecca. We really appreciate it. Hopefully people can reach out to you.
Thanks for having me, Sean and Brendan. I appreciate it.
No problem. So again, you can book with us through our Calendly links. Talk to us about what you need, and we can put you in touch with Rebecca, or you can go right to the source, Rebecca herself. All of her info is there too. Again, like, subscribe, and share across all the platforms. We appreciate you tuning in. And until the next one, keep it real.
Collective.
Nailed it. First try. Take care.